Okay, for chapter 6, I decided I would do a problem in Excel. I think that will be easier, certainly easier to read, and there's no T accounts or anything like that that I need to do. I'm going to do problem 6-11, and just to give you, again, a brief overview, proprietary funds, again, is like a fund group. Internal service funds are distinguished within that group, but they are really kind of reported separately because they're a little bit of a different type of animal than your normal proprietary funds. Your regular proprietary funds would be like a business that the government owns. And sometimes the business is set up because there's a need to serve the citizens, and sometimes it's actually a need to serve the government. But when it's proprietary, it implies that it's actually kind of operating for a profit motive. Being a government, it shouldn't have too big of a profit. Any profit should, I guess, theoretically be used to maybe support, maybe enhancing the business, put more infrastructure, buy equipment, things like that. But certainly they shouldn't be making like huge profits. And there's all kinds of, I guess, arguments you get into is, should the government be doing a type of business that an individual could have as a business, as far as unfair competition, so on and so forth. And that's, I guess, beyond the scope of this problem. But I know I had that issue when we were talking about maybe doing a daycare, about competing with other daycares. So a daycare would be an example of proprietary. And these, they're called enterprise funds for governments. For universities, they're actually called auxiliary funds, but they're the same thing. A bookstore is an example. The water, when you pay your water bill, is a huge example for the governments and what you see in this book. But also when you pay your garbage, any sewage bill, which is called the Wastewater Fund. In Fernandina Beach, we had a golf fund, a marina, and then you come over into the internal service fund, which is very similar, but it's more for the internal runnings of the government. It still has a lot of the same accounts, but it is the revenues that it earns is revenues that is generated from within the government. The number one, the main one that, or main couple that I see, are called a motor pool, which is where you have your garage to service all the different vehicles, police cars, fire cars, or fire trucks. You might have just the, you would have maybe your utility trucks, so you can, there's pretty big need for that. And then another internal service fund I can think of right off the top of my head would be like a copy center, where they do all the main copying and stuff for the different departments of the government. When they do the way internal service fund works, for example, if you take the copy center, they have revenues that come from the government. Their expenses, maybe it's to buy copy paper. Then when the general fund gets worked, when I say general fund, let's say it's the city commission, and they need to have a lot of copies of reports to have at the city commission meeting. This is a common use of it. Then what the city commission department in the general fund would have to have an expense, and then the internal service fund, the copy center, would have a revenue. And then I think in another chapter we actually start talking about what happens when you have kind of a dual expenses within the copy center when they buy the copy paper, and then expenses over in the general fund when they actually pay the copy paper. But the entries is very similar when you're looking at journal entries to everything that you've been doing thus far. So I'm just going to jump right in. And the book, at least in the problems, could probably do a better job of kind of keeping you in order of how these journal entries should be done. But the main thing, at least for this problem, I think what it will do is kind of help clarify what you end up needing to do with the account. So for your problem with this, you're just simply doing the closing entries, and you probably already kind of had that down from the last problem, but still I thought it would be a good idea for me just to go into a little bit more detail, and this problem kind of served that purpose. So we start out with this city that is operating a summer camp program for at-risk youth. Both businesses and nonprofit organizations sponsor one or more youth by paying the registration fee for program participants. And they have a statement of cash receipts and disbursements which summarizes the activities in the program's bank accounts for the whole year. Then they give you some information about a loan, a bus that was purchased, and then finally they say that all invoices and salaries related to 2012 have been paid by close of business on December 31st, except for the employer's portion of December payroll taxes, which total $900. So from all this information, it's step one. Well, the requirement for Part A wants you to prepare the journal entries, closing entries, and a statement of revenues, expenses, and changes in fund net assets, assuming that the city intends to treat the summer camp program as an enterprise fund. So we know we're going to do entries, do closing entries, do a schedule, and then I'm going to go back up to 1 and go 1 through 4 in the order of actually doing the journal entries. And again, this is problem 6-11. So under part 1, I'm going to start out with the cash receipts. I have cash and for 127. Let me do a debit here. Credit. It is for registration fees. It's $127,000. And just to put what type or where on the financial statement it's going to end up being, it's going to be the revenue is going to be under operating revenues, and then charges for services. And this is a common account name, the charges for services is. Still, we're doing number 1. We're going to have cash. The next is a loan that we borrowed, and reading on down under 2, they tell us that it's a loan from a bank for a 5-year period, so we know it's actually a long-term note. And so I'm going to put long-term notes payable. Still on number 1. Let me separate it by operating and non-operating so that it'll make it easier when we do our financial statement. I'll tab over. And I'm just going right down and looking at each item in order. I have a payroll tax expense. Insurance expense. And then I skip labor, but that can either be wage or salary expense, whichever you want to name it. And then we have a bus purchase and interest on a bank note, and they're not operating expenses. The interest is actually not operating expense, and since there's only one, I can put it on the same line. And then under the total category of equipment is where this bus would end up showing up. The total that I'm paying out is $154,175. I can make sure that that's correct by going down and looking down here, and I see that I did put the amounts in correctly. Next, I've done all the entries for the receipts and the disbursements. So the next thing I'm going to do is number 2, and I have to do interest on that note. Again, it is non-operating. I'm going to do a formula to figure it out. It's 45,000 times 6% times 3 months, because the first payment is April, so I have to do interest for January, February, and March. And I get 675. Okay, and the next step is to do the depreciation, which is under item 3. This is an operating expense. And then your account is accumulated depreciation. I'm going to do the calculation here. The cost is $5,000. It's got a 5-year life. I bought it in April, so that means that I have 9 months that I'm going to actually depreciate instead of the full year. That comes to $8,250. And then finally, we have to record the payroll taxes under number 4. So I've got all the entries. The next thing I want to do is close everything for the year before I do my financial statements. I'm limited to 15 minutes on these videos, and I'm right at that mark, so I'm going to have to close this one out, and I'll start back with the entries, the closing entries, and then the financial statement.